Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor, and in today's video we're talking about the secret reason why in 2023 I'm going to be investing in cheaper houses up north. I haven't done it a lot in the past, but today things have changed a little bit and I'm going to go through exactly why. It's a whiteboard session. We're going to be going through all the numbers. Stay with me. I'll give you as much detail as I possibly can. But before we get into the video, if you could possibly give it a big like, it massively helps me out with the algorithm. And if you haven't already subscribed, why not consider subscribing? We've got our subscriber dividend portfolio where every single month I pay out the dividends to my subscribers so that you guys can take part in a passive income journey with me. And I'm adding another £2,000 to that pot every single month. So it's going to grow over time. And it's going to really mean that myself and my subscribers can take part together and see passive income actually being produced and given away. Why not? Let's get into the video. Let's talk about why in the past maybe I haven't invested in these cheaper houses and why today that's really changing. So it really comes down to two things, okay guys? Number one, interest rates going up. Number two, rents going up. Now, in the past, I've really stayed away from these sort of properties because the rents have been so cheap. So this is an example of a property that I was looking at today, and we're actually going to go and see it later on this week. So hopefully we'll put an offer in, and if the offer's accepted at the right number, then this is the sort of deal that I'm interested in buying. It really does require the second part of that to work out though, and that is the offer, because I need to build some insulation in when there's all this uncertainty. But the property's up for sale for £95,000. The rent in this town on this property on a 3-bedroom, and bear in mind there's only 2 available at the moment, and they're up for anywhere from £850 to £875. And I've based my numbers on the lower of those 2 numbers. I've also looked at things that have rented recently in the area, and they're renting anywhere from £800 at a very poor standard, all the way up to about £1,000 for a 3-bed. I should probably mention this is a 3-bedroom property. So £850 to £875 is the expected rent. Now, when you look about 2 years ago, these properties were being rented out for about £695. So the rent going up really does make a difference when you look at this deal. And the reason is, in the past, I've stayed away from this because the maintenance cost, has never been like 10%, for example. If you're renting it out for £700, you'd only be applying sort of £70 a month for maintenance and voids. However, it's always been more like £100 a month or £1,200 a year on a property like that in my experience. And when it's all come out in the wash, it's just not looked that pretty as an investment. And although the mortgage and interest rates have gone up significantly, because the mortgage is quite low, when the deal comes out, the return is actually not bad at all. So let's go through the figures. Let's talk about this one in particular. It would be a £95,000 purchase. I'm going to try and negotiate this for about £85,000. If I could get it for £85,000, I'd buy it. But that would mean at full asking, £23,750 as a deposit, £71,250 going to mortgage. Now, in terms of the costs on the purchase, we're looking at £23,500 for deposit. As we said up there, £23,750, isn't it? There we go. Legals are £1,500. Fees, and I've just kind of like done a blanket kind of valuation fees, mortgage arrangement fees, all those things together will be about £1,500. And then a £3,000 stamp duty, just to round everything up. We're looking at around about 30 grand in. Now, when we extrapolate that data and we look at the mortgage, a mortgage on a buy-to-let at the moment on that would be about 5%, and that is £296.87 a month. Insurance, in my experience, about 20 quid a month for a standard landlord insurance policy. £200 a year is about normal. Voids and maintenance, with these sort of houses, I say £100 a month. I think that's about right. A management of about 10%, maybe it's 8, but let's say 10, £85 a month. So all the costs involved in that, minus off the rent of £850, would give us a profit of about £350 a month, or £4,188 per year profit. Now, when we extrapolate that and put it all together through an ROI calculator, so we take our profit, divide it by our amount of money we're outlaying, we get 14.17% return on investment. Now, that is an exceptional ROI on a fairly low risk investment. If you consider you're not putting a huge amount of money in, the cash flow is fairly reasonable, and if you can build in a good profit or a good discount at the beginning when you're buying this, you've got a hell of a lot of upside while really minimizing that downside. I think rents at $850 are very affordable. You know, even in these cheaper areas, that is an affordable rent. When we're looking, for example, in Didcot, where a house price for a 3-bed is going to be $350,000, $400,000, the rent is only about $1,400. You look at the difference in price versus the difference in rent, it's not that significant. It returns about 4%, 5% at the moment. Very, very low ROI. But because the amount that you're borrowing on a property of this sort of price is so much lower, the ROI is so much higher today, now that those rents have moved on. And the rents have moved on in a lot of these areas because there's just been a restriction in supply. That's why I think today I'm breaking some of my previous rules. That's the reason that I'm going to be investing in some of these cheaper houses. And there will be an opportunity at some point for you guys to come along on that journey with me, whether it's me taking you through a property that I'm buying, talking to you about the figures, showing you around it, all that sort of stuff. I will be as transparent as I possibly can. And indeed, if any of you guys want to invest and want to get in contact with me and maybe work with me in the future, we could do that as well. But that is the reason, guys, why I am going to start looking this year at houses that are on the cheaper scale. I want to be buying this for about $85,000. If I can get it any lower than that, I will. But if I could get a 10 grand discount on that, I know that's about the value at the moment. There's a lot of fear in the market. There's no work to be done on it. I think those returns are excellent. What are your thoughts? Let me know in the comments. I'm massively interested, but that is why I'm going to be looking at properties like this in 2023. Cheers, guys.